It's not about chasing headlines and listening to what people want you to understand.
Correct.
It's about, going into the minutia and the boring old books and all of those things. It's so funny. When the Fed made their big announcement in June, the headlines came out where they said Fed is raising the Fed funds rate, and interest rates are going sky high, and it was just and why you would want to buy a home makes no sense. And I looked at it and I said, all right, well, let's peel it back. So I went back and I got geeky, right? And I do that, right? I mean, I
love it. I'm the same way, man.
I dove into federalreserve.gov, right? So I went in there and I looked at the website and I looked at the press release. And I didn't just look at the press release. I actually looked at the statement. And in that statement, buried underneath, was that the Fed projects that they think inflation, which was at that point around 8.5%, they thought that they could get inflation down to 5.4 by the end of the year. And I'm thinking to myself, wait a second. So if mortgage interest rates have followed inflation all year long.
Exactly.
Right? They've been in lockstep. So we started at 6.2% inflation, and that's where interest rates went from 3.25 to 3.75 overnight.
Correct.
Overnight. And that's when I knew I'm not having any refi business this year because it's going to continue to go up.
Correct.
Because the Fed, they basically were asleep at the wheel. Like they just let it run way hot, right? So last year they said, oh, we're gonna let it run a little bit. Back when it was manageable, when it was at 4%, 5%, and their goal is 2%. So that's on them. Right? That's on them to where they had an opportunity to do something about it, but they just kept the piggy bank going.
Absolutely.
Right? And all these programs that they funded and the moratorium and extending this and extending that. Every time you do that and you create shortages, you create more inflation.
That's what I was just getting ready to say.
Right?
You're trying to plug up a big hole in a boat with a Q-tip.
Right.
It's not going to work. It's not going to work. So depending on who you were, at a particular point, you enjoyed the fact that inflation was happening.
Right.
Right?
Right.
Until it got real.
Yeah, there you go.
Right?
There you go.
Now, when it started affecting other areas of your life, that's when you started reaching for, okay, when is this thing going to hit? And what you're talking, or end, and what you're talking about is that this thing could be years.
Oh yeah.
It
well,
could be years.
And the Fed, they kind of talk in riddles a little bit, but they drop hints, right? They drop breadcrumbs. So back in June, they said, okay, yeah, we're projecting that we're going to get inflation back under control, and we're going to be at 5.4 by the end of the year. Well, they've already released guidance in August and said they are projecting that inflation will stay high. And you also look at these new reports that are coming out, higher employment, which means that that the economy's still going, right? We're not crashing. We also have higher manufacturing index, like all these things that are pointing to there's still some more where we can fight inflation even more because the economy's still humming along. Right? But they have said that we're expecting inflation to run high. So to me, if I was thinking, oh, interest rates are going to come back down by the end of the year because they're projecting a 5.4. September, we're in it now. In a couple weeks, my projection, they're going to say we have revised our guidance, and we're going to say that inflation, instead of at 5.4, probably 7 to 8%.
Easily.
Right? By the end of the year. And maybe, and I don't know if it's at 9, who knows? But what that tells me as an advisor to help my clients as a loan officer is, look, if your thought process is that interest rates are just going to come down, and you don't want to pay points, or you don't want to look at these temporary buy down programs, you don't want to look at this stuff, you might want to take a second look.
Correct.
Because interest rates may stay higher for longer than we expected.
Exactly. And that is the point. And that's a beautiful segue into this. And I see, this is what happened. This is the geeking out part.
Well, there you go. There we go.
So the thing is that that's why you have to have an entity that creates the leverage against that. Right? And so when we're talking about leveraging these particular structured policies to be able to pay me that annualized return, that's the leveraging aspect.
Right.
So now if I have something that matches or is above that inflation rate, then that zeroes me out.
Right.
So that means that anything that I earn from that particular point in time is an add-on. It's a bonus. It's not me playing behind.
Right.
That's the name of the game, right? A friend of mine, he's a I don't want to call him out because he don't like when I do that. But he's a billionaire.
Yeah.
He's the owner of a major investment firm, and he told me, he said, like, wealth is in simplicity. Lower expenses, that increases income. Invest the discretionary. And I love that thought process. But in my mind, I said, well, what happens if you don't have anything that is actually going to help you lower the expenses?
Right.
Right? And so that's where I coined the financial foundational leverage term from. Let's leverage our income to then allow that to lower expenses, to increase the income, so that we can, and now we have, as we've invested the discretionary, now we have multiple streams that work for us to be able to do these things, to where now whatever is happening, we're not affected.
Right.
We have to get people in the mindset of to stop relying on the things that the government is doing, and let us start doing our own thing as the people, so that we can be able to sustain ourselves while they figure it out.
Exactly.
Let's give them the true understanding.
Yeah.
This country is trillions of dollars in debt.
Right.
I'm not sure they're the people that we want to call on to figure out how to deal with money.
Exactly.
Right?
Exactly.
Right? So let's just keep it. Let's make it simple. Let's keep it simple. So yeah, I appreciate it.
Yeah, yeah, and you know, when you think about it, also, I mean, that's why the stock market's gone down the past couple of weeks, right? Because you look at we talked about the risk-free rate, right? Which is, you know, you could put money in treasuries, which is the risk-free, right? Or you could invest it in the market. But if you raise the Fed funds rate on a short-term basis, and now the risk-free rate is at 3.5%, and a dividend yields at 3.5%, where are you going to put your money?
Exactly.
Right?
Exactly.
So that's why the stock market went down, because now they're looking at, okay, well, investors are like, where am I going to put it?
And that's why business is good.
There you go. There you go.
That's why business is good.
So to me, I'm seeing this as back up the truck, because if you're an investor, you're going to get more of these types of deals by buying real estate. It's a hedge against inflation. And your runway is going to be much longer than we thought originally. Right? So that's what I'm encouraging my clients in not just looking at it from, okay, just the monthly payment standpoint and just from a cap ratio standpoint, but overall fundamentals.
This is long term.
Yep,
we're
100%.
talking about long term strategy, right? And anytime we're dealing with long term, we're giving up the instant gratification and saying that we're taking on the cloak of delayed gratification with the understanding of what the overall goal is. And the overall goal is sustainability of economic life. Right. That's what we want. Right. So if we got to take a small hit a bit to be able to elevate, then that's fine. Because we know that on the back end it gets greater later. Right. And that's the beautiful thing about both of our industries. It provides that. So like, I'm excited, man. I'm excited to help. I'm excited to be able to share more information. I'm excited to hear from your guys and your ladies and everything that they bring to the table to be able to give this education to the masses, man. This has been great, man.
I appreciate it, man.
Appreciate you.
Thank you
brother.
so much.
Thank you, man. Absolutely.